Hello! Robert Keosaki, a well-known American entrepreneur and author of the Rich Dad, Poor Dad series of books, offers 3 ways to invest your first money from a business. Let's look at these methods in more detail. 1. Real estate. Keosaki believes that investing in real estate is one of the most stable and profitable ways to allocate money. He advises starting by buying a small house or apartment that you can rent out to earn a steady passive income. In addition, real estate, especially in developing areas or cities, can benefit from the growth in property value over time. 2. Business venture. Keosaki also advises considering investing in young growth companies that have the potential for rapid growth and profits. This type of investment is usually high risk, but with the right choice and diversity of the portfolio, it can bring high returns. It is important to know which sectors of the industry are in a phase of rapid growth and have the potential for further development. 3. Core business. Finally, Keosaki notes that investing in your own business is the smartest and safest way to invest money. If you already have a successful business, then by expanding its scale and investing in its development, you can get high profits and become more financially independent. This may include developing new products or services, scaling up an existing business, or purchasing additional assets to grow it. However, Keosaki emphasizes that in order to invest in real estate or business ventures, it is necessary to take into account financial risks and be prepared for possible failures. He stresses the importance of having sufficient financial background and education to make sound investment decisions. Ultimately, each investor must make their own decisions in accordance with their goals, risks, and situation. Subscribe to the channel so you don't miss new videos.